Hello, my name is Tyler, and today I will be presenting my buy or sell recommendation on Broadcom. My agenda is company info, company executives, company financials, stock history, ratio analysis, buy or sell recommendation, risks, and self-evaluation. So what is Broadcom? Broadcom is a semiconductor company that designs and develops a large range of infrastructure software. It's a world leader in product portfolios that serves data centers, software, broadband, wireless, storage, and industrial markets. It serves some of the largest Fortune 500 companies in the world, including Apple, AT&T, HP, Motorola, Lenovo, and many more. So company executives, President, CEO Hockey Tan, CFO Tom Cross, CLO Mark Brazil, and VP Controller Kirsten Spears. Income statement overview and revenue. So revenue, you can see, has increased every year from 2015 to 2019. You can see a big jump in revenue from 2015 to 2016, 104%. And this is linked to the Avago purchase of Broadcom for $37 billion. Income statement overview, net income. You can see every year from 2015 to 2019 posted positive net income, except for the year 2016, which posted negative $1.6 billion. And you can see a big jump from 2017 to 2018, 1.7 to 12.2 billion, and then a drop in 2019. So we'll see. We'll keep a closer look on that. And balance sheet overview, total assets. You can see every year for total assets is positive. You can see a huge gain in assets from 2015 to 2016, again likely due to the Avago purchase of Broadcom. And also you can see a big jump from 2018 to 2019 of about 17 billion. And stock price history. So the current price right now is $265 a share and 50 cents. And the 5-year high is $331.58, which was on 124.20. 5-year low, $111.45, which was on 8/21/16. And I also provided the COVID-19 low, just because that's a huge event that we're going through right now, which was on 3/18/20. And you can see it's already up over 100 points. So you can see that's a pretty good time to buy. And market cap history. So you can see that the current market cap is 106.3 billion. 5-year low is 29.42 billion, which was on 8/14/16. 5-year high was 128.95 billion, which was on 120/20. And I also provided the COVID-19 low, which was 76.5 billion on 3/16/20. Obviously, this is linked to major sell-offs of the stock. Okay, price valuation. So I did price to earnings per share. You can see the current price for all three of these valuations is $265.88, which is obviously the current price. And the intrinsic value for price to earnings per share is I came up with $281.67. And according to this model, it is undervalued. And then price to sales per share, I came up with an intrinsic value of $258.68, and this is overvalued according to this model. And price to book value, intrinsic value of 374.62, and according to this model, this is very undervalued. So, and I also did a little ratio analysis just to give you a little bit more financial information on Broadcom. I took the AVGO 2019 to the industry average, and you can see for a quick ratio, which is pretty much just a measure of the firm's ability to meet short-term obligations. You can see that it's performed worse than the industry average. And then for inventory turnover, it performed okay. Nothing to really be too concerned about. And then gross profit margin at ROE, excellent compared to the industry average, which is always nice to see. And let's move into my actual recommendation. So I believe this is a pretty strong buy for 3 reasons. Strong dividend, its impressive M&A history, and its high growth compared to others in the industry. Dividend history. So currently it yields 5%, which is pretty high for such a high growth company. It's raised its dividend for 9 years straight, and its free cash flow has been growing every year since 2010. So that's pretty reassuring to see, just because obviously as free cash flow continues to grow, they'll be able to continue to raise their dividend. And after gathering information about Broadcom's dividend history, I assessed a dividend discount model, and I used perpetual growth rate of 8% and a discount rate of 12%. And results show the projected DGM is 1,660.44 or 44 cents, and while the projected price per share in 2030 is 767.20. And M&A history. Broadcom acquired PLX and Technology and LSI Corp in 2014. In 2015, they acquired MLEX Corp. 2016, Avago Tech acquires Broadcom Corp. Broadcom Limited is formed, and they also changed their ticker symbol when this happened to AVGO. 2017, Broadcom acquires Brocade Communication Systems Inc. 2018 acquires CA Technologies, and 2019 acquires Semantic Enterprises Security Business, which is pretty much just a computer software security business. And as you can see, Broadcom has acquired and merged with numerous companies. This increases its overall product segment and allows it to serve a relatively risk-averse security as a relatively low risk-averse security in an investor's portfolio. And how does Broadcom rank in the industry? That's my third, was high growth. You can see here I used a semiconductor ETF, and then I used an S&P 500 ETF trust, and you can see that the semiconductor ETF has well outperformed the normal S&P 500 ETF. And then moving to total returns within the industry, 5-year, you can see that Broadcom has a massive return over the second leader, which is Intel, of 119%, and Broadcom posted 440%. And then moving to the 3-year, you can see Micron posted 272%, and then second was Broadcom at 130%. And then 2019, you can see all the companies posted pretty low returns, especially Broadcom at 5%. And I think obviously this has a lot to do with the China trade war. So moving forward, we'll keep a look on the returns, closer look on the returns. And then moving to risk. So obviously, another risk would be another trade war. You can see how it has affected the returns within the last year. Pretty much every company within the semiconductor industry has struggled due to this. And then supply chain disruption is another. And an example of that would be what we are currently going through with COVID-19. You can see that they operate a lot of the Broadcom's assembly and operation plants are overseas, especially in Malaysia. And due to this current pandemic, a lot of business operations have been shut down. So obviously this affects the stock tremendously in the supply chain. And then ample debt due to M&A. You can see that's a pretty high number to be in debt, 44.7 billion. But Broadcom's ability to handle its liabilities moving forward is extremely critical. But operating in a growing market and its strive to always increase its market share is definitely reassuring. So moving forward, I mean, as much as that number may scare you, it goes to show that they're willing to take the risk for the amount of profit share in the future, which in end will obviously, turn into a huge profit. So, and then self-evaluation. Overall, I researched other analyst opinions, and many came up with the same buy recommendations. A lot of actually really strong buys, and just because how low the stock is right now, especially in March, 166. That was probably the biggest bargain we're going to see for a while for Broadcom. But even right now, I'd say it's a buy. It's obviously the China trade war and everything. Moving forward, I can't see anything else but the stock actually rising. So, and if the risks come into play, I still think it's going to bounce back pretty strongly. And as Broadcom continues to grow and expand, will maintain its impressive dividend growth while remaining a top returner in its industry. So, and that will wrap it up. Thank you for listening.